Hi there, you're with BloombergQuint, and this is the fine print. Reliance Retail and Future Group's 27,000 crore deal seems to have run into legal troubles, and playing spoilsport is Amazon.com. Now, to recap for all of you, Future Group has decided to sell its retail, wholesale, logistics, warehousing assets to Reliance Retail for around 27,000 crore. Now, key group companies of Future Group, namely Future Retail, Future Lifestyle, Future Consumer, Future Supply Chain Solutions, Future Market, will merge into Future Enterprises. And Future Enterprises, by way of a slump sale, will transfer the retail and wholesale businesses to Reliance Retail and Fashion Lifestyle. These are the developments of the last month. But in 2019, Amazon.com NV Investment Holdings acquired a 49% stake in Future Coupons, a promoter group entity of Future Retail. Amazon was also granted a call option, allowing it to acquire all or part of the promoter's shareholding in Future Retail. At the same time, Future Coupons and Future Retail had also entered into a shareholders agreement. The shareholders agreement said that prior approval of Future Coupons is required on certain matters, including transfer or license of all or substantially all of the assets of Future Retail or material assets, transfer of assets above a certain threshold to a related party, amendment of articles of association in conflict with the terms of the shareholder arrangement, or any issuance of share capital in contravention of the shareholders agreement. Now, it is this shareholders agreement that Amazon is alleging that Future Group is in violation of. Most recently, as yesterday, Amazon has also initiated arbitral proceedings before the seat of arbitration is in Singapore. So we also learned that Amazon, besides sending a legal notice, has also issued an arbitral notice to Future Group. To make sense of all of these developments, what is Amazon hoping to achieve from these legal proceedings, and what happens to the Future and Reliance deal? To discuss all of this, I have with me corporate lawyer Murali Neelakantan. Murali, thank you for joining us here this late in the evening. Your first quick thoughts on why Amazon has chosen this point in time to send this legal notice to Future Group.
Sorry, I can't hear you. I've lost sound.
Murali, I'll repeat my question. What do you make of the timing of Amazon's legal notice and also the initiation of arbitral proceedings in Singapore?
I was surprised that it took so long. I would have expected that when the board meetings were held by these companies and these decisions were taken, Amazon surely would have had notice of these board meetings. It would have known that this restructuring was on the cards. I'm surprised that they took so long. So clearly there must have been something in the works between the partners that has caused Amazon to wait this long.
Okay, Murali, what the one-line response that we got from Amazon is that Future Group is in, or Future Coupons and Retail are in violation of the contractual obligations. What we have before us is a part of the disclosure that was made to the stock exchanges last year in August, which basically give us a glimpse of on the kind of rights that the shareholders of Future Coupon have vis-a-vis Future Retail. Based on that, what do you make of the Reliance Future deal? And this, we are hoping with the assumption, or we are going ahead with the assumption that Amazon did not give a green signal to the Reliance Future deal.
Well, it's very difficult to say because we don't have the shareholders agreement between Amazon and Future. Future Coupons is not a significant shareholder of either of these two companies, at least from what you and I have seen in the stock exchange disclosures. Future Coupon does not have a significant shareholding in either Future Enterprises or Future Retail. I would expect that in a shareholders agreement at a holdco level, especially where there is a call option to acquire shares in the future, there will be certain protections. And one of the basic protections that we expect to see is that any disposal of assets will require consent. Now, clearly, you can't have an option for an asset in the future when most of those assets are likely to disappear. So I would expect that to be a very fundamental provision in the shareholders' agreement. Likewise, with any substantial asset disposals, any large transactions are likely to trigger a series of events. Now, what those series of events are, we don't know. But we can only speculate that, from what we've read in the press, that Amazon was offered a chance to make these investments. Whether it refused to or wanted more time, time expired, we don't know. And so we can speculate that given the last few months of work that the two parties would have done, Amazon chose not to invest in these two companies or in the scheme as Reliance Retail plans to do. And therefore, I suspect that the interpretation that Reliance and Future will be taking is pay up or shut up. So either you pay up and make the investment or suffer the consequences of a dilution. So that's, one explanation for what is known in the press.
Okay, Murali, I want to re-emphasize the point you make that, in a shareholding agreement, shareholders agreement of this nature, the basic rights a shareholder would have, because as per the exchange notification last year, the call option allowed Amazon to acquire all or part of the promoter's shareholding in Future Retail and is exercisable between the third to 10 years in circumstances subject to applicable law. Can this, can, let's say, Future take this interpretation that this call option or, let's say, the right of first refusal comes alive only in the third year, which is 2022, and in between, Amazon had no such right?
Uh, Again, you and I are both speculating, and that's a fair comment to expect that there is a time period before the call option can be exercised. But to go with that, one should expect that Amazon, when it decides that it will wait 3 years to acquire the shares, the expectation is that those shares will be valuable. And if substantial assets are disposed of, then those shares are clearly not worth as much. So I'd be very surprised if the fundamental basis of a call option, which is the business continuing and growing for the next 3 years, is taken away by one of the parties saying, yes, you can have shares, but they may not be worth very much because we've sold all the assets. So I would suspect that most corporate lawyers would have foreseen this and ensured that the assets grow, do not diminish, cannot be sold off. There can be no stripping of the assets of the company, leaving it with an empty shell on which there is a call option. So I'd be very surprised if there is a period of time to exercise a call option and the party that has the call option allows the other party to strip the assets.
Okay, so that's one argument based on the facts that we have before us in favor of Amazon. The other sort of interesting aspect, like you pointed out, that Future Coupons has warrants essentially in Future Retail, which will convert into about 7.3% of the equity share capital. But over with that 7.3%, Future Coupons also had these rights in Future Retail, and including the ones that I just read out, that prior approval of Future Coupons will be required. And when I say Future Coupons, it entails the 49% that Amazon holds in Future Coupon. So is it fair to assume that for a deal that's taking place, or that is that the board has approved between, let's say, Future Group and Reliance, this kind of a deal will fall within the contours of something that would require prior approval from the shareholders of Future Coupon?
Well, we haven't been able to figure out if it requires approval of the shareholders of Future Coupons. I suspect that it will. It will be a veto item where Amazon will have a chance to have its say. Even if it's not on the board, uh, as a board matter, it should be a shareholder approval matter. And I suspect that disposal of this right and the assets of Reliance, future retail and future enterprises will be a matter on which Amazon should have normally a veto.
Okay. There is also this angle. I just want to go back to the, call option point, which kicks in from 2022. There's also an angle of the multi-brand retail, right? I mean, Amazon presently holds 49% in future coupons, and it can't go beyond that because, the FDI restrictions, don't permit it to. How is that likely to play out in this tussle?
A future right to purchase could be structured in a variety of ways. So it could be a separate call option agreement. And you may remember that from the Vodafone case. And it may be possible to assign that call option to an Indian entity. So it is still a right, it's a very valuable right. And let's say in 3 years' time, if FDI norms don't permit Amazon to go beyond 49% in multi-brand retail, and those regulations continue, then there's no reason why Amazon cannot sell that call option to someone in India, a domestic shareholder, to participate and buy that additional shares that it's entitled to call.
Okay, all right. So let's now come to how the legal proceedings are likely to pan out. We know that Amazon has initiated arbitral proceedings before the Singapore International Arbitration Center. How do you expect that to unfold?
So I think the notice is being served. We don't know what the contents of the notice are. Uh, I would expect that Amazon has time on its hand because shareholders still need to approve it, CCI needs to approve it. So it's unlikely that they will go for an emergency arbitration where they expect some interim relief immediately. So there is an opportunity for them to do it. I suspect there isn't really that kind of a time pressure where something is likely to happen in the next week or so. If it was likely that the disposal is effective in a week or so, then they may have sought uh, appointment of an emergency arbitrator and proceedings there to seek some interim relief. I think that's unlikely, given the regulatory barriers to and approvals required to get this deal done. So I suspect that the arbitration will start in a few months. Notice will be issued.
And if in case a situation arises for Amazon to suspect that, assets might be disposed of, and let's say the two parties in India, Reliance and Future, are able to expedite it to an extent that that threat becomes very real for Amazon, what does that emergency arbitration sort of entail?
It's unlikely that my own view is that it's unlikely that they will go for emergency arbitration. They can always go to the Bombay High Court and file a Section 9 application on the Arbitration Act and ask for interim relief, at least to preserve the assets while all this is being discussed. Again, I think it's unlikely because the CCI needs to approve it, the NCLT needs to approve this scheme, so it will have an opportunity before the NCLT uh, to make its case. Whether it has locus or not is again the same issue as we discussed with each other in the Tata Mystery case. Whether they will have locus to get into the NCLT is a question, but they can bring to the notice of the NCLT that there is this arbitration pending, and perhaps the NCLT should wait until the outcome of the arbitration is decided.
Okay, all right. So to sort of briefly sum up your views, you expect, let's say, the arbitration proceedings to start in few weeks or a month or so. In the interim, if the threat looks very real to Amazon, that Future could sort of alienate assets, and some of the transfers can happen after a shareholder or CCI and an LCLT approval. In the interim, Amazon can approach the High Court and get a Section 9 order, which basically will prevent Future Group from transferring any assets, right?
Correct.
All right. Okay. what is okay? So now, after giving or discussing, all of these things with very few facts before us, Murali, one last question, and I'll ask you to do some again crystal gazing here. What does Amazon hope to achieve in all of this? It's not like the kind of investments Reliance is bringing in, Amazon will be able to, or I don't know. What is the end game here, or what could be the end game here?
I think there has been a bidding war between Reliance and Amazon. It would be naive to think that Future would not have discussed this with Amazon. Amazon's probably lost the bidding war, either by numbers or by maneuver. And so the best they can expect is some sort of an exit, either now or in the future. It's unlikely that that Reliance will offer to buy out the 193 million or 200 million, whatever it is that Amazon put into Reliance. Uh, my my speculation is that they will remain. They will settle this with a takeout sometime in the future.
All right. So basically, it's an exit that Amazon is hoping to is looking at, in your opinion, and a handsome one in that, I suppose. Given
I think money back will be a good deal in something like this. If they can get their money back now or in a couple of years, I think that's not a bad deal. They're
okay,
unlikely to do much better than that through litigation, given what we know so far.
okay. So then a payday is what seems to be the motive of Amazon at this stage. Murli, thank you for joining us with your quick thoughts on how this legal battle is likely to pan out. We'll come back to you as we know more and as this battle unfolds. Thank you for joining us here on Bloomberg Quint, and thank you so much for watching.